Morning, everyone. Let's go to that screen. May 9th pre-market prep. Title of this one is Capitulation Watch. So I've been talking about this for months, where we first predicted ARKK would get smashed, and then that would be followed by the major indices, and it's happening. We are here. To me, it's undeniable at this point. It's just a matter of time. So there's different opinions out there. You'll see people thinking, "Hey, maybe we can get a bounce in here," but we may get a bounce. We can get a bounce anytime. We're gapping down today. Will that turn around into a bounce? I don't know, but I think if we get any bounce, it's short lived, and at the minimum, as I've been saying over and over, pretty much every single day, the minimum correction I'm looking at is this 200-week moving average, which still represents a bull channel. And I've been warning as of recently, if you do get a recession, it can even go much lower. So that's what I'm looking at. I'm not looking to buy bottoms. I think it's too risky. I'm just selling tops, reducing risk assets on pops, selling covered calls on pops. So that's my strategy. If you look at Apple, which is really the driver, I believe, for NASDAQ to get there, we're gapping below the key 50-week moving average this morning. This is a level I've been talking about for a number of weeks. And it's below that red line. So I don't know. People want to be heroes, and maybe there's a lot of technical buying that comes in because we went too low, and you see a pop. Okay, fine, but I mean, come on, this is a key level. Look at this 50-week moving average. It's held it all the way. The one time it broke it down here in 2018 drawdown, it tagged the 200-week moving average, and then it pretty much held it. You can see it went below for just like a day or so in the COVID crash. So this is a very important key level, and I don't think it's good. All right, I can't imagine any kind of bounce lasting more than half a day to a couple days unless something material happens in the news, right? Something material happens. So we got CPI data Thursday, no, Wednesday, I believe, and then PPI data Thursday. So maybe that's some sort of catalyst. Maybe that data is going to come in and not be as hot as expected, and that can cause a rally. But even then, I think it's going to be short lived because our problems are on the supply side as well with what's going on in Russia and Ukraine. So, anyway, that's the situation. I'm holding the line, haven't changed my opinion, been consistent about this for a long time. There are a couple stocks I do want to mention. Lockheed Martin was on the news yesterday, some interview talking about they want to double the production of the Javelin. And that brought to mind the research we did early on, right after the war, stocks, and I'm bringing them up. And I made a list here. The fuel, aerospace, agriculture, nuclear, gold, and minerals. So Lockheed Martin was my top pick in that space. And I have a little bit of good news yesterday. It's down this morning, 0.5%. And when you get like a market liquidation like we're having right now, it may not be able to escape the carnage, at least short term. But you can see longer term, this is one of the healthier charts. So, hey, if you want aerospace exposure, if you're looking for stocks that might buck the trend, Lockheed Martin might be one of them. And this is the rest of my list here. You can see wheat doing well. Oil is not, because I think we're seeing the sentiment is that of demand destruction this morning. Where's the USO? I don't have it here, but you can see the oil stocks, and then you pull up USO. So when you see a big gap down today, people are thinking, oh, maybe there's going to be a recession, and recession means demand destruction in oil. So oil can go down also. I think that's the thinking. That's the logic behind why oil is getting smashed also, but you don't get demand destruction in wheat. And I think this story is gaining traction. I've been talking about this for a long time, and I believe the sentiment trade around wheat, corn, soybean agriculture is getting stronger and stronger. I don't have a recommendation for how to play it, aside from, hey, maybe you want some DBA corn and wheat in your portfolio, or fertilizer, MOS. So anyway, going back to our list, that was yesterday's interview. I wanted to point that out, Lockheed Martin. CFVI, I was a little bit more hopeful about what could happen today because of the release of 2000 Mules. I guess I misunderstood. I thought it was going to be like free and would only be on Rumble. I wasn't paying attention as closely as I should have, but it's not free. You got to pay like $30 for it. And it's also on another platform. So there's two streaming platforms it's on. I think Salem Media. Now, Rumble did come out with a press release this morning saying that there was $1 million of sales in the first 12 hours. Okay, whoop-de-doo. I don't know if that's significant. They seem to think it's significant. But I'll tell you this, their app rankings for April, very good. They haven't released April numbers. They did release, when they released the most recent numbers, they did it for the whole quarter, January, February, March, Q1. Okay. It looks like they're possibly not going to do the monthly releases anymore, or maybe they will if there's a record month. But looking at the iOS app rankings, very, very good. I think it might have been another record month, April. So who knows? Maybe we'll get more press coming out of Rumble today. But as far as the catalyst of the movie 2000 Mules, you can see strong support here, 1130, 1, 2, 3, 4, quadruple bottom here. But yeah, no, I don't think this thing's going to move huge today based on $1 million of sales in 12 hours. Okay, so that's that. Kodak relative outperformance this morning. 3,500 share bid at 537, 5,000 volume so far this morning, and it has been outperforming over the past 5 days. They have earnings tomorrow after the close, and I do not anticipate at all any top or bottom line numbers that are going to cause the stock to continue to do well as far as the numbers go. So pay attention carefully what I'm talking about. There are plenty of people out there who think business moves at the speed of light. And because Kodak last quarter announced these new businesses they're going into, they're like, oh, they're going to, beat earnings. That's not going to happen. First of all, Kodak has $1 billion a year in revenue. So any kind of momentum this early on in the transparent antenna space or the electric vehicle battery coating space or the Codalux, the fabric coating, like this stuff is not going to be material for a while compared to $1 billion. So, people who are bidding this up, hoping there's going to be some sort of report of big revenue or profit, they're going to be wrong. And if that's the trade, they're going to be hurt. The trade and then the investment thesis here is based on possibly some sort of restructuring to unlock the value of the real estate, to unlock the value of the pension, although I don't know how much that overfunded pension is going to be worth, and also more qualitative information coming from the company on these new areas they're going into. There's not been a press release on them yet. So what I'm looking for is hopefully the company tomorrow at 5 p.m. will have a Q&A session, and I can jump on that call and ask some questions and tease out some good qualitative information about them, about this insider buy, about the value of the real estate or the pension plan, how big are these new markets they're going into, at what point will they become material, at what point will they help inflect the company into profitability. These are the qualitative kind of questions which could move the stock if they are forthcoming about it and if there's good news about that. So we'll be looking at the content of the press release, but also the conference call tomorrow afternoon. If we don't get any of that qualitative stuff, this is going to go down. In my opinion, I mean, it's going to go with the NASDAQ. And it's already outperforming the NASDAQ in the past 5 days. So it's going to play some catch up, right? It may immediately after earnings, gap down, 5-10%, something like that, to catch up with the bad performance of the indices last week while this was overperforming. So keep all that in mind. Dario, I'm hoping, man. I don't know. I really think this stock is undervalued. They have earnings on Thursday, and it keeps going down, hitting new lows. But I'm hoping the street will be surprised. Based on our last interview with Erez, everything is still right on track. And I want to hear him talk about the stuff we talked about in the interview about how they're going to withstand this period in the stock market and be able to get to profitability based on a combination of the cash they have on hand now, and a line of credit, a non-dilutive line of credit, possibility of that, plus the possibility of Sanofi investing more in the company, and that's it. So no more warrants issued, no more dilutive financings coming. And I think the average investor is just lumping this in with Teladoc, lumping it in as a risk asset and saying, hey, this is not a profitable company yet. They're going to have to raise money on bad terms at some point. And if they can debunk this on Thursday, I think the stock could do really well. I am not worried about this. I'm losing a lot of money, but as far as I'm concerned, Errors has delivered. It's just been on delays. Everything he has said has come true, has proven to be credible and reliable, just on some delays. So I'm hoping that he can give us some really good qualitative info Thursday about how they're going to beat this bear market. And also, I think the top and bottom line numbers are going to be at least in line. Don't see any negative surprises there like we saw with Teladoc. So that's going to be good, I believe. All right. Going down, SEAC. This is unfortunate. I think at some point you gotta give deference to the wisdom of the market. The market is saying that we don't think this deal is going to close at $2, and you got to start saying maybe they're right about that. When all the stocks are down 50, 60, 70%, why should this deal close at $2? It may get reworked. And I guess I got to concede that's possible at this point. So that's the story with SEAC. And I think my average is probably 125 or something like that. So hopefully, if it does get reworked to 150, I'll take that as well. And maybe it doesn't get redone. We'll see what happens with that. So that's the story with SEAC. The market is speaking, and they're taking down every single asset value. Even Twitter's down a little bit, but that's pretty strong. $54 obviously is your price over there. I do have some uncovered shares now because some of my covered calls expired on Friday, so I'm hoping for a pop at some point this week so I could sell more of those 51 or 52 dollar calls this week. So that's what I'm looking at on Twitter. And don't have much more than that. Let's see if there's anything that just came out on the news this morning. Oh, I went through this stuff. Nothing new in the last 15 minutes. So listen, that's the story. I think there's a lot of risk here. Still, I think we're heading to 276 or so on the Nasdaq, and I'm not going to give you a recommendation on how to play it. You do what you need to do. But that's what it looks like to me. So I've been reducing some risk assets. I have a little bit of cash now. I have a nice amount of PSQ shorting the Nasdaq. So, capitulation watch. That's the title of this, and we'll see. So far, none of this feels like capitulation yet, and we'll just have to monitor those levels, especially Apple. Apple to me does not look good, and I'll let you know when capitulation happens. Okay, that's something I'm good at recognizing in real time as it happens. So you can collaborate with us in the VIP community through this rocky time together. Thank you, everyone.